If the Fed cuts rates in July, like I've been telling you, they will, home prices are about to go absolutely insane. And I'm not talking about a little bump. I'm talking about a full-blown buying frenzy that's going to make 2020 look like a warm-up act. Look, here's what nobody's telling you. For every single percentage point that the mortgage rates drop, 5 million more Americans suddenly qualify to buy a home. 5 million. That's not my opinion. That's math. So when the Fed cuts a quarter point in July, which I'm predicting they're going to do, and they will, you're looking at 1.25 million new buyers flooding into a market that already has zero inventory. Now pause. Think about that for a second. 1.25 million more people who couldn't buy a house last week are suddenly going to be pre-approved and out there hunting for homes. Where exactly do you think those homes are going to come from? Spoiler alert, they're not. Last weekend, I was talking to one of my clients, Sarah. She's been trying to buy for 8 months now. 8 months of getting outbid. Sellers ghosting her, price fatigue. She finally tapped out in May and renewed her lease. But here's the thing. Sarah's got a 720 FICO. She's got 20,000 bucks in the bank. And the only thing keeping her out is her debt to income. It's just a touch too high at today's rates. And if we see a 0.25% drop, Sarah's instantly back in the game. So are a million other Sarahs across the country. This is where people are getting the market all wrong. They're saying sales are down, prices are softening, the market's cooling. No, the market is not cooling. It's boiling. It's just locked up behind a wall of affordability. Let me make this simple. Buyers didn't go away. They got priced out. And when affordability comes back, boom. And now let's talk about Gen Z. These kids are in their late 20s. They're getting married. They're going to have babies. They're forming households. They are the largest new wave of buyers we've seen since the millennials hit the scene. They've been grinding, saving, living with roommates or their parents' basements, waiting for a chance when rates drop. That's their signal, and they're coming. And let me hit you with something else. You know those price drops you're seeing? That's not a market correction. That's a seller's correction. Those folks who overpriced based on 2022 fantasies and are finally waking up. And when demand spikes again, those price drops, well, they're going to bounce right back. That $750,000 house back to 800 or higher. You watch. I've been doing this long enough to recognize the pattern. Low inventory plus rate drop plus pent-up demand equals price explosion every single time. Now, let me tell you what I saw in 2019. Rates dropped. Within 60 days, I had buyers crawling out of the woodwork. I had people who'd ghosted me 6 months earlier calling like we were best friends. Bidding wars were everywhere, 15% appreciation in 6 months. Now imagine that, but with less inventory. More buyers, more pressure. That's what we're heading into. And the media, well, they're still talking about a housing recession. That's cute. They're measuring the wrong thing. They look at transactions, not demand. They look at closed sales, not pre-approvals, not offers, not showing activity. If they looked under the hood, they'd see what's coming. And the numbers don't lie. Demand hasn't disappeared. It's just on pause, like water building behind a dam. When that dam breaks, well, it's game over, guys. And here's the part that no one talks about: inflation. If housing prices jump 20% in the next 6 months, and I believe that they probably will, that becomes embedded inflation. That becomes the new baseline for home values. And the Fed won't be able to unwind that without tanking the entire economy. So if you're waiting for prices to go down, you're actually hoping for a full-blown recession. Is that your plan? Now, let me hit this from another angle. Cash buyers and investors, they're not waiting. They're already moving. They've been through this rodeo before. They're securing financing, leveraging the equity, and moving fast. They're not talking about timing the bottom. They're creating the bottom. Now, here's how this is going to play out, step by step. Fed cuts in July. Within 2 weeks, mortgage apps spike. 30 days, showing activity will explode. 60 days, bidding wars, multiple offers, houses gone in 48 hours. 6 months, prices up 15 to 20% in most major metros, especially in the Bay Area here. And listen, I'm not here to scare you, okay? I'm here to give you the unfiltered truth. The market isn't going to crash. That already happened in affordability. But if you're pre-approved today, you're already ahead of 90% of the buyers who are going to wake up late to this party. Now, if you wait until everyone else figures this out, it's too late. This window is right now. I don't care if you use me or use your other lender. Call anyone, run your numbers, get pre-approved this week. Because once the headlines hit, once the media starts saying Fed cut rates, the crowds come rushing in. And here's my last word. You're not just buying a house, you're buying access to schools, to safety, to stability, to your own piece of this country. And when prices explode, that access gets further and further out of reach. So I'm asking you, are you going to sit this one out again? Or are you going to get ahead of the stampede? Let's talk, let's game plan, let's check you in. Because you deserve more than just watching it all happen. You deserve to own it.